to the audio. And we are recording, and welcome everybody. This is our bond MBS tracker tutorial for Rate Alert. I have on the line with me David Schurmeyer. David Schurmeyer, a long-standing bond analyst in the industry, one of the most respected people out there. How are you doing, Dave?
Fine, Frank. How are you?
I'm just fabulous. Dave, we're going to teach these guys what these charts mean and how we can use this information, okay?
All right, I'm for that.
All right, the first chart we got here is our coupon chart, I'll call it, let's say. And this is where we're tracking the Fannie Mae coupons and the Ginnie Mae coupons, and we're tracking Treasury notes as well. And so we've got the notes themselves, or the bonds themselves, here on the left-hand side that everybody can see. And then we have some information that goes across from the left to the right. David, let's go over this information here real quick. First of all, we've got this. We'll talk about why we're tracking this particular bond here in a second, but let's just go through and figure out what these numbers are real fast. So we've got the Fannie Mae 30-year bond, and this one happens to be the 4.5% bond, and the page is just refreshing here real quick. And guys, just so you know, you may see the page refresh from time to time because it's updating the data. We have the last sale at 101.23. So what does the last sale mean?
That means that's the last print that we've gotten on the price change. When mortgage prices change, then our system will update that and show that change. And
so is this basically the current price, like that we see?
It's the current price, yes, of the
okay.
In this case, the 30-year 4.5 coupon for Fannie Mae.
Okay, fantastic. And then we have day change, negative 61 basis points. Now, we track, our system tracks in basis points, and I know some systems track in 30 seconds. And so we're using basis points. What do you think? Is there a difference? Is there anything better, or is it just one way of looking at it compared to another?
Well, in the market itself, in the mortgage-backed security markets, the prices are based on 30 seconds. But in the mortgage world, when we get down to the retail pricing, the lenders, the big lenders that are buying all these mortgages from originators are pricing in basis points. But it's the same thing. We're 61 basis points lower on the day, and that's essentially 20, 30 seconds roughly when you make the conversion. But what we're trying to do here at Rate Alert is give you both the 30-second price as well as the basis point price, particularly on our AM and PM lock advice.
Got it. And just so the people, if they're not too familiar with that, 100 basis points is basically 1%, right?
Yeah, but in this case, we're using tenths, actually, instead of a full basis point is 1% move in the interest rate. But we're looking at basis points in tenths, but everyone out there knows that.
Okay, so basically, when I see negative 61 basis points, what I'm seeing right now on the day change, that means that this particular coupon, this 4.5% coupon, has worsened, since it's red and it's negative, has worsened, right? Or rates have gotten worse, or at least the fee associated with that coupon at 4.5%. The fee has worsened by 61 basis points, or just shy of 5/8 if we're working in eighths. Like
the price has declined by 61 basis points. That's correct.
Okay, and so it's essentially worsened, and that would be why it's red here.
Right.
Okay, and now we have the high and we have the low. And so real quick, what do we got here?
Well, we've got the high for the day, and then the next column over on the low of the day. Okay. And as we can see here, the low of the day is a little bit lower than the last sale on the far left side.
Got it. Okay, good. So we're not having a good day here, are we?
No, we're having one of the worst days in the bond market that we've seen in months.
Okay. All right. And so then we've got 10 a.m., 10:30, 11, 11:30, 12, 12:30. And are these just static pricing updates, essentially, of the coupon? And this is all Eastern time, correct?
Exactly. Right.
Okay. So they're saying at 10 a.m. we were off by 34 basis points. At 10:30 we improved a little. We were only off by 28. We held at 11. At 11:30 we really slipped down to 53. We held at 12 at negative 53. Then at 12:30 we slipped again, and now we're down. It was down at negative 68.
That's correct. Right. It's just tracking the price movement through the day.
Okay, great. Now, another thing that we can do here is we can actually click on this Fannie Mae 30-year 4.5 coupon, and we can bring up in a graph format what this particular coupon has done. So we can see here there's a line. There's green on the top and red on the bottom. There's basically a line that goes here separating the green from the red. And you can see where the market started on this particular coupon. And we can track how it's moving through the day, which in this case is not so good for us. Rates are definitely going up. So when it dips down into the red, that means the rates are going up. If we were going up into the green, that means the rates or the costs associated with rates are going down. Right, David?
Yeah, exactly. The rates, when it's in the red, interest rates going up. When it's in the green, interest rates are coming down.
Okay, great. And we can kind of just track here and just see what we've got going on. Does the trading desk for mortgage-backed securities, David, does it actually open at a certain time during the day, then close?